Okay, guys, I know I love my income portfolios and my income ETFs, but I also do value and appreciate and need a growth portfolio. And so today I want to walk you guys through my three powerhouse ETFs and my core growth portfolio. Let's jump right into it. Okay, guys, first and foremost, thank you guys to all the new Patreon members. I cannot thank you enough for your support and for supporting the community and supporting the channel. I really do appreciate it. And today we're going to walk through my Google Sheets portfolio components to it at least. And so that is also available via the Patreon. If you want to join the Patreon, you will get access to this master stock portfolio, which will include these core three ETFs that I will suggest as part of that strategy. So thank you again for your support. Okay, so let's jump right into those three ETFs. All right, and this is the master stock portfolio template that I've shared in the past. Again, you can take this and copy it and adjust it as you see fit, adjust the income allocations, adjust the portfolio value, adjust your ETFs. But my core three growth ETFs, and we're talking about growth right now, okay? They're gonna be VOO, which is the Vanguard S&P ETF, VOO, QQQM, which is the NASDAQ 100 ETF. Now, QQQ is the more expensive variety versus QQQM. QQQM has a lower expense ratio, which is why I like it better. And then the third one is IBIT. I'm a Bitcoin bull, and I believe that in every portfolio strategy, we should have an allocation of Bitcoin. What that percentage looks like, for me, it's 20% allocated to a growth portfolio, 20%. Now, people might have a lower tolerance and want to do maybe 5%, maybe 2%. You have to do what feels right for you. And maybe Bitcoin, you're not a believer in it. Maybe you're not a bull in it, and that's okay. You have to do what is right for you and what you feel comfortable with. Do not be swayed by what other people say and what other people think. Do what is right for you and invest how you feel comfortable and what will help you sleep at night. For me, I've been loving the growth of BTC. I've got in and around 2020. Certainly, I would love to have gotten in earlier, but I got in when I got in, and have certainly seen a lot of appreciation and gains since then. So I have that as part of my three-tier strategy. And then the fourth one, if you want to diversify into global markets, it's going to be VXUS, so the Vanguard Total International Stock ETF, excluding the US market. So this is another one, that you might want to consider, like a 10% or 5% of your portfolio to kind of get international exposure, because you always want to be hedging and diversifying into different markets. Without a doubt, are we hedging heavy into the US market because we believe in US exceptionalism and we believe that the US market will continue to be the lead? Absolutely. So we have 70% at minimum allocation with those two core ETFs. But then with IBIT, surely that's like a global asset, which I love. I love the fact that it's not, country specific. We have the opportunity to really be global with this. So that's 20% of the allocation, and then 10% if you want, again, international exposure or not. That is up to you. But for me, to keep it really, really, really simple, we have VOO, we have QQQM, and we have IBIT, which is the iShare Bitcoin Trust ETF. You don't need to pull the coin on your own. You can just buy the ETF. It's a lot more simple to do so. Now, if you were to backtest this portfolio, which I've done here using Testfolio, if you were to backtest this portfolio, I'm using VOO, QQQ because it has more history than QQM, and IBIT. Okay. Now again, IBIT is newer to the market as well, so you're not going to get its full impact over the long period. But since 2024, early 2024, we've seen an average annual return of 31% with this strategy. This is not rocket science in the sense, like, I'm not doing some robust, unique individual names, and, this is just basic S&P 500, basic QQQ, and Bitcoin. The market has been on a bull run, and so you see a 31%, growth rate over the past couple of years. The average S&P return is going to be in and around 10%, not adjusted to inflation. And QQQ is just above that at around 11 to 12%. Whereas like Bitcoin, the expected average return moving forward, we can see probably it will be around 40% annual return. That's kind of what Michael Saylor preaches. And I think, Jack Mahler and a lot of the guys that are the Bitcoin bulls, Pompliano, 40% annual return on Bitcoin, guys. Like if we can get that, like we are living right and we're going to meet our financial goals. Okay. So let's say you put 300K in here. For any good investment strategy, we need to wait 10 years to its full effect. Assuming a 31% rate of return, which again is not going to be realistic, but I just want to show you the impact of compounding. Okay, 300K initial balance, ending balance 4.4 million. Like what else do you need, right? Again, 31% is super unrealistic. Honestly, let's move it down to 10%. 300K over 10 years, rate of return 10%. 300K is going to turn into around 800K. But I think that, with this, because we have Bitcoin and we've allocated more, I think we can see something more like a 15% annual rate of return. And I really want to take 300K and move it to above $1 million. So 300K at a 15% annual rate of return will net you a $1.2 million ending balance in 10 years. And this is without even contributing anything additional to it. Okay, if you want to contribute maybe 5K a year every year, you're going to see a much larger compounding effect happen. And we went from 1.2 million to now 2.5 million. And so this is a great pairing to our income-based strategy, which will help us pay out income every month. Using those ETFs like a QQQI. This is going to be our growth workhorse and help us grow while generating income with other portfolios. And in any given period, in any given 10-year period, the S&P 500 has guaranteed a positive return 95% of the time, and QQQ is around 88 to 91% of the time. So the probabilities are in your favor. Instead of going to Vegas and betting on horses or sports betting or going on roulette, in this case you're betting with a much higher degree of certainty that you will come out on top, right? And maybe you guys want to look at individual names and options and all these other fancy things, but I'm telling you, when you keep it simple and you dollar cost average in and you have conviction and you focus on a conservative approach, you will win in the end. And so, let me know what you guys think. Is this these ones you're investing in? And again, like if you like the spreadsheet, you can grab it from my Patreon. But today, really, I wanted to emphasize that with any good portfolio strategy, you need a balance of both growth and income. I focus a lot on income, but also we want to be focusing on growth. If you have other ideas for different names, there's SPMO, there's VIG, there's VGT, there's a lot of names out there, but really, it's up to your discretion on how you want to approach this. And I know one last thing about it, I want to add in this. So I want to look at the overlap between SPY, or we can even do VOO, which is what we've been talking about, VOO and QQQ. QQQM in case you want that. And everyone would tell me, there's too much overlap between QQQ and SPY or VOO, right? There's a ton of overlap. And it's true. There is 87% holdings overlap, right? 87% holdings overlap. But you're going to see the difference in weighting that you'll get with QQQ versus VOO. So I do think it's still a healthy diversification play to have both in your basket. All right. When it comes to VOO, you're going to be more heavily weighted towards financials, healthcare, industrials, energy, real estate, utilities. Okay. These are all things that QQQ doesn't do good at, and also gives you a lot more names to play with. Now, where QQQ is more indexed towards is going to be communication and technology. And that's, really the opportunity there is to get us more growth. As you know, tech generally provides a higher, growth rate, annual growth rate, cumulative growth rate. So that's really where we want to emphasize much, much more weighting to get us the best possible return. You can see like both do have high weightings to like a Nvidia, a Microsoft, Apple, Amazon, Meta, and that's fine. But of course, QQQ has the higher weighting, right? And is it ever a bad thing to have a lot of a good thing, right? Nvidia, do we want more of Nvidia? Yes, we want more Nvidia. Like literally the best stock of all time at this point. Microsoft doing amazing over the past, decade, century, however long they've been out. They're doing amazing. Apple's had a pullback, but anyways, like we still believe in Apple and all the rest. We want more weighting into them, right? But let's look at the VOO overweight relative to QQQ. So Berkshire Hathaway, JP Morgan, Visa, MasterCard, ExxonMobil, Johnson & Johnson, Walmart, Home Depot, Oracle. These are all more pseudo value, I would call them. And we want that diversification into value while having like growth with them. These aren't just like dead value stocks. These are ones that are still growing. JP Morgan doing phenomenally, Visa doing phenomenally, Berkshire Hathaway, a growth workhorse. Now with QQQ, you can see that it's much more allocated to the tech that we want. Netflix, Microsoft, Nvidia, Broadcom, Palantir, which is even on right here in the top at this point here. AMD, etc. And so we want that overweight into QQQ. We want to invest as much as we can into tech to give us the best opportunity for growth. As much as people say, oh, there's tons of overlap between SPY or VOO and QQQ, while there is, you're getting more weighting into tech. And there's some different names in QQQ that just aren't available on SPY, and of course, vice versa. So, all this notion that just because there's overlap, you can't invest in the two of them. No, I think that you can never have enough of a good thing. Of course, you want to stay diversified, you want to stay balanced and rebalance your portfolio maybe, but honestly, I'm just riding VOO and QQQM, and I'll just ride it for the next 25 years, 30 years until I want to sell for retirement. So I think personally, I'm on board with enjoying the overlap, and understanding it's both sides benefits and focusing on that. And you can also do something like a VTI if you just want to buy the US index, the US market. You can look at other things that just buy the whole US, or look at a VT, Vanguard Total Market Fund, which just buys up the global stock market if you just want to be super simple. But for me, S&P 500 pretty much captures all the greatest large cap stocks that the US has to offer. QQQ much more indexed towards the right strongest tech names, and so the combination works really well. Okay guys, what do you think? Are you invested in these ETFs? Are there others you'd recommend? Do you want to simplify it further? Do you want to expand it further? Let me know in the comments below. Join the Patreon if you can. Subscribe to the channel. Outside of that, guys, all the best and cheers.